Beyond Meat just released major updates on the convertible notes and the potential dilution, and most people call this a disaster. But is it really? Today we're going to find out what the notes are, how they actually work, and whether this could be a bullish signal. The stock is now trading at around $1 and it's looking really cheap at the moment. So in this video we're going to find the truth. So buckle up and let's dive right in. We're now looking at the charts on TradingView, and we can see that it's now trading at $1.08. And last Friday it closed with a bullish candle, you can see here. And it went here under the $1 mark, but the $1 mark reacted as a support level and it bounced off it, and then it closed above the $1 sign. I think this is a bullish sign. Of course, nothing is guaranteed, but this looks great. And here you can see that my average cost price is now $1.75. I bought a little bit more at $1. So dilution happens when a company issues more shares and put it in the circulation. And now each share is worth less, obviously. It's like printing money. The more money you print, the less valuable it becomes, in theory. Now we're looking on Seeking Alpha, and we're looking at the latest earnings call on November 11th. So here he said that we reduced debt levels by approximately 900 million, nearly 75% of our total leverage, and put in place a path to potentially convert another 209 million for a total reduction of over 90%. Which basically means that the majority of the dilution has already happened. It's already priced in the stock. And they still want to do like 209 million extra, but they're not going to do it with ATM selling at the market. They're doing it through 7% convertible notes. So what is Beyond Meat's plan to get rid of their remaining debt, raise cash, and not over dilute the stock? How are they going to do it? Well, they just released that they're going to use convertible notes. Here you can read, Beyond Meat announces determination of conversion rate for 7% convertible senior secured second lien PIK toggle notes due 2030. So if you're like me, you're reading this and you're like, what does this even mean? It sounds complicated and it doesn't make sense. So I will explain to you in simple terms what their strategy is to raise cash and avoid dilution. Beyond Meat is going to use convertible notes to get rid of their remaining debt without risking massive dilution. Could this be a brilliant move for the creditor and for Beyond Meat? Well, what is a convertible note in the first place? So a convertible note is a loan that can turn into shares instead of being paid back in cash. So Beyond Meat receives cash instantly, and in return they give a convertible note. So the creditor can convert this note into shares before 2030. And if they convert, they will own the shares and then dilution happens. But the trick is that the creditor will not convert if it's below the conversion rate, because then we will realize a loss. So the dilution will now only happen if the stock price goes really high. So let's say it goes to $10, then the creditor might convert, and that could create dilution, and then it can go back again. But as long as it's below the conversion price, the company is relatively safe from dilution. So investors can lend money now and can convert it into stock later at a set price. As long as they don't convert, no extra shares will be issued. So no worries for dilution. And it's used by companies to raise cash quickly without paying in cash. If you think about creditors, you need to think about people with a lot of money, like hedge fund managers and big institutions. So what's the upside for the creditor? They can convert anytime at the fixed conversion price to profit if the stock jumps. In theory, they can convert at any time. And later, they will do a shareholder meeting, and there will probably be some rules for the conversion, but generally speaking, they can convert if there's a profit. They have limited downside. If the stock stays low, they still get paid interest plus their loan repaid, so they still get their 7%. And there's high potential upside with much lower risk than buying the stocks directly. So this is ideal for like hedge fund managers, because if the stock goes to zero, they still get probably like 50 or maybe even 80% back of the money, because they put the creditors first. And if it goes all the way up, there's still unlimited upside. They can convert at the conversion rate, and then they can realize their profits. This creates dilution, of course, but the dilution will only happen once the stock is super high. And now what's the upside for Beyond Meat, the company? The dilution risk is now low. Stock far below the conversion price, so notes unlikely to convert, but they still receive extra cash from the creditors. The balance sheet's relief, raising cash helps stabilize the company and extend runway. They get rid of the debt. Optional future upside. If the turnaround works, shareholders like myself, for example, benefit without heavy dilution. So we're now back at the article of Beyond Meat, where they talk about their strategy with the convertible notes. And you can read here, convertible notes will be 573 shares of the company's common stock per $1,000 principal amount of the 2030 convertible notes, which represents a conversion price of approximately $1.75 per share of common stocks. So the conversion price is $1.75, which is $1,000 divided by $573 is $1.75. And that means that now the stock is trading at around $1. So it's below $1. So the creditors will probably not convert right now because then will realize a loss. So conversion will only happen once the stock price jumps much higher. So for now, minimal risk when it comes to dilution. Prior to obtaining stockholder approval of certain proposals that will allow the issuance of common stock pursuant to the terms of the 2030 convertible notes, which is expected to be sold at a special meeting of stockholders scheduled for November 19th, 2025. So the special meeting, that's on November 19th, and then they will decide the exact terms and conditions on this plan to use convertible notes to raise cash. So we're now back at the charts, and you can see that I put here one line, and this is the conversion price, which means that if the stock price stays below $1.75, the risk of dilution is minimal because creditors will not convert and no new shares will be issued, which is great. Most of the debt is already fixed by the company, and most of the dilution is already priced in. And once it goes all the way up, then these creditors could decide to convert, which creates new shares. But it's only 200 million. They already did like 700 million. So they want only to do 200 million extra. So that risk is now mitigated. So here's my conclusion. Big investors stepped in. Securing major creditors shows that serious money doesn't think Beyond Meat is going bankrupt. They found creditors who are willing to give Beyond Meat money in return for 7% convertible notes, which means that these big money creditors do not believe that Beyond Meat goes to zero. If else they would not do it, that will be a waste of time. The second point is that there's minimal dilution risk right now. With the stock price below the $1.75 conversion price, dilution is unlikely in the short term. I see this stock as a high risk, high reward play. I'm bullish, but I keep my position at around 3% of my portfolio. Because if you only allocate a small percentage of your portfolio to one stock, then now I'm essentially risking $1 to make $10 or $20. And if you go all in and it goes down 80%, you need 400% to come back. So always diversify well, have a cash reserve, always do your own due diligence. This is just for educational purpose only. So the shareholder meeting on November 19th is coming soon. So if you want to stay up to date and you like this kind of content, feel free to like and subscribe. And I'll see you in the next video.